Welcome to the Pump and Dump channel for another video update, this time looking at gold, natural gas and then some stocks, and looking at just my observations over the last couple of weeks of how to trade this market. I guess is the way to think about it, is that taking gold, I talked about this when it had this massive meltdown of $250 an ounce from its high of 1700 to 1450. Of course there is this support here that was previously resistance and then back tested support, and yeah, it kind of rallied up and then it melted, and at that point in time Zimafo was trading as low as 157, which I talked about also on B2 Gold. It was like at 216, and I talked about how those prices on those stocks implied a $1,200 to $1,300 gold price. Of course at that point we were at 1450, so it was definitely a buy. And yeah, we saw the stocks, it had this nice rally up here to 250 and then it went back down to 188 or 180 whatever as we bottomed here for the second time, and then we had these three big green candles taking us all the way up back to 1650. Of course personally I thought we'd like get to 1550 and we'd wiggle down, but you can say maybe it overshot to the top, or you could say maybe it was the stimulus packages and the QE programs announced that would kind of change the fundamentals and it would mean that we should keep going higher. I really don't know. I just look at production costs and I just don't see how $1,600 over the longer term will hold. But anyway, what happened when we had those three green candles in candlesticks in gold was Zimafo rallied all the way up to fair value, and then it's starting to sell off, and B2 Gold did the same all the way to fair value and then it sold off. And probably it will just keep selling off because the traders at this point in time, they look at this sideways actions on gold and they're just like, oh, it's not moving up, it's not moving down, you know, what's the point of holding these stocks? They're near intrinsic value, let's sell them off. There must be something else out there that is cheaper. And the same I saw in natural gas in mid-March here. We have this trend line, of course I have talked about it. We did break out of it in February and then we came right back down, and then we broke out more strongly here, and I thought this kind of marked the bottom for natural gas, being, you know, it would kind of like be 180, you know, between like maybe 175 and $2, and it would kind of go there and eventually go up. But then we did go below again, went below the 2016 low. Price kept falling. The RSI is moving up. Some people say that's a bullish sign. I think it might be, yes, that sounds like it makes sense to me. But we're kind of like down here and we need to, you know, stabilize and move up over time. The key thing is, of course, the fundamentals are very positive for natural gas in the longer term, because we're living off high inventories from the last winter, which was quite warm. I would say in the US maybe all the flaring because of oil and gas production rising to all-time highs is what was heating the country, and they didn't need to use natural gas to heat their own, you know, their homes and their businesses. And yeah, so anyway, we had a warm winter and we have high inventories, and now the companies are talking about slashing capex for their growth. They're slowing down, they're reducing production. Some companies are still in dire straits and they're not going to make it, they're going to fold. So last year we had some bankruptcies and some avoided bankruptcy, but they're going to fold this year. I mean, Chesapeake and Antero Resources and Gulfport Energy and SM Energy, they're just in real dire straits and they're just not going to make it. So yeah, we're going to see not only the natural gas producers, the more heavily weighted natural gas producers, reduce supply into the market, but also the associated gas from the oil producers is going to come down, because the oil producers, they are getting $20 to $30 a barrel, and that's just not enough for them to justify getting oil out of the ground. It doesn't cover them growing their reserves, and the reserve lives that many of these companies have, they are like 3 years, 5 years, 8 years, and they have to kind of stretch those now, and they kind of have to reduce production to reflect the reality that they can't keep growing. And you know, if you have like a 3-year reserve life, then you just stretch it out over 5 or 10 years, and that of course destroys the equity side in your holding, but it manages to stabilize the company and reduce supply and be able to survive the downturn. So on the other hand, of course, you can also argue maybe that with electric fracking, some of the natural gas that's supposed to come into the utility is going to be used by the companies themselves to power the fracking equipment to get the oil and gas out of the ground. But maybe that's just kind of like not going to last, because they're going to have to sell natural gas to offset the fact that they are not getting any money for oil. And yeah, so many positives and negatives. The inventory, I guess, is short-term negative, but inventory doesn't grow. It grows if it gets refilled, but what is already in the inventory now is not going to grow. It's just going to decline because it's going to be used. And then the other negative is, of course, that we seem like we're heading for recession, probably already in recession for quite some time, and the QE programs are going to take some time to work themselves into the real economy. Of course, right now just the banks are being bailed out and companies are being kept afloat, but companies are just going to look at a slower growth environment and a reduced economic activity scenario, and they're just going to lay off people and just going to cause going to cause hardship on a lot of people for sure. And that's going to mean that the economy is going to look weak. And you could say that with a weak economy, demand for energy is going to be lower. True, but in this environment, a lot of energy producers are not going to make it, so the supply is going to come down too. So maybe energy will come into a demand-supply balance, where even though the demand is going down, the supply might go down even faster, and we might see a stabilization in natural gas here before moving up in terms of price. And if we take some of the massive moves of the last couple of years, we've been as high as $4 or $5 in 2018 because there were shortages. I think we will see shortages again. And in 2014 we were at $6-7. I remember this kind of off the top of my head. It was around the same time when the Ukrainian-Russian skirmish was going on, and I didn't understand why natural gas rallied at that point in time, but maybe there was just like some sentiment or something crazy, I don't know. Anyway, key point is the fundamentals are very bullish. If we look at CNX Resources, it had been trading at half intrinsic value for the longest time, and when we had this breakout here in natural gas price to the upside, that signified that, I think this signified that we are turning bullish and we've broken this downtrend, and we'll probably see it rising over the future. What happened is the market, which was trading CNX at half intrinsic value, rallied it all the way up to full intrinsic value that I had calculated, but of course I didn't think this would happen. I was kind of baffled that it did. If we just take a 6-month chart, you can see that technically you could say it hit the resistance at the top here, November 8th, which was around here. I made a video actually about this when I talked about how we broke this trend line, and then we were like back testing it and CNX was still rising. I thought it was stupid and I sold almost everything and then natural gas melted, CNX melted, and oh well. That was a good call, I think, in terms of my decisions. I've made some bad decisions in the last couple of weeks, but that's just, I guess, how it is. Just make good decisions and bad decisions and hope it works out in the long term. Anyway, it rallied all the way to full intrinsic value, kind of like Zemafo did here after these 3 candlesticks here that were very bullish or suggested something was happening. But as with Zemafo now, it is selling off. CNX did the same. It sold off and it just went all the way back down to half intrinsic value approximately, and that kind of took me also by surprise, because I thought, like, because this had happened and it was like one thing that it was like the first time I really was consciously aware that it rallied to full intrinsic value, and after seeing it just whittle down, I kind of came to understand that in this market you have to sell intrinsic value and you have to buy steep discounts, and that's probably what I'm seeing with Zemafo here. It peaked here at 350 something, and now I think it's just going to go down, even though the gold price is higher than it was when it peaked. It's just like the momentum is out. Until the next big candlestick comes, this will not go up again. Probably will go down here maybe to 250, and at that point maybe the gold price stages another big move up, and then it goes up with it. That's kind of how I see it. It's my thinking. It's not easy to make the right calls here all the time. It's just the market is just very bizarre. I mean, we bottomed here on the 24th of March at somewhere around $5, and then we rallied to 660, and I thought, maybe this means we're going to go back to intrinsic value, but then we kind of went down again, and now we're just waiting to see what happens in the natural gas price market. Of course, there's this rising RSI and this dropping share price, and people call this a bullish divergence or bearish divergence, whatever. And they would say that because of this, the likelihood of a big move up is given. If we take this period here, I guess maybe this is similar. We had this decline here whilst the RSI was rising, and then it had this big move up. And the same here, we were kind of falling whilst the RSI was stable. Who really knows? I mean, these RSI things are not always intuitive. I mean, if I just draw a trend line here, I could say that if we come down and break below here with the price going down, that then we maybe are not going to see a rally in natural gas price for the next maybe 3 to 6 months, and maybe we go down to $1.10 on the current month's contract. But the real important thing is with natural gas is to understand that the futures market is what we really need to look at. If I just bring up my website for bar charts, barcharts.com, I can show that in February 2021 natural gas is priced at 266, and if I take one of the other contracts like January, it's at 269. So these are the winter months. These are usually the stronger months. March 21, 256, and then it usually goes down a bit after that. April 230. But if I just take September 2020, it's down below $2 an MCF. So this year is looking weak, but if you can sell into the future market, it should be good, and that's kind of why I like CNX Resources, because they've sold forward almost all of their natural gas production for this year, just under $3 an MCF, and next year and the year after is also heavily covered, and the years after that they're building their hedge book, and therefore this company is very predictable. There's no chance that this company goes bankrupt in this oil and gas meltdown that we're going to see. This will be one of the winners. I mean, it could go down to $3 to $2, who really knows, but I just don't see any justification for thinking that in 5 years time that this stock will not be in the 20s again, just on an intrinsic value calculation, looking forward at compounding. It could of course be something stupid like an acquisition that they make, that's where they overpay and they get a really bad piece of real estate that is not going to help them. But I think the management, even though the former CEO who kind of had built this company, I guess, has left, and the new guy is in, who is from CNX Midstream. Well, time will tell how he handles things, but I think he's handled things in light of how the previous CEO handles it. At least that's what I saw so far. So I hope that that he does a good job too, and that he will carry this little company towards a I don't know, like a $5 or $10 billion market cap. We just look at this massive move up in 2008. I don't see that happening again. But I do think just on the technicals, if you just take like the 2018 highs in like $17 or so, that's doable in 2 years, and $22 or whatever it is here is doable in 2 to 3 years for sure, and maybe like 4 years from now, maybe it's a $30 stock. So yeah, it's kind of how I see it. Remember, this is not investment advice, even though I talk about price targets here and estimations of where I see things going. This is all just investment opinion, I would say. It's not investment advice or recommendations for you to buy or not to buy these stocks or commodities. It's of course your choice. And as usual, if you want to leave a question, comment, or opinion, you can do so in the comment section. And if you like the content, don't forget to subscribe and have a good day.